Hello, everyone, and welcome to the National Inventor Club. We are in April 2024 in the Inventor Smart Community app. You can download it on Google Play and Apple App Store. It is free for everybody. There are obviously premium incentives on there, but you can enjoy all the networking, collaboration, events, book clubs, meditation groups. There are so many things happening, and we have some great new features thanks to our Inventor Smart team that are putting together in the app, such as adding to your calendar, which it might not be a big thing, but it is actually, because a lot of people say, you know, I had it, I was thinking about watching this go live, and poof, I forgot about it. So now you can add it to your calendar. We've had the Inventor Smart Spotlight series, which Samantha and Sean have been active interviewing our premium members in the app. So definitely check it out. Inventor Smart Community on the Google Play and Apple App Store. All right, let's get to the main speakers. So, and this is funny because I talked about actually extending tax day here on National Inventor Club because that's our topic tonight. We are going to talk about, okay, so I came up with this great idea, whether it's a business, a product, whatever it is that you just came up with. And now, what do? Should I incorporate? Do I act as a sole proprietor? What does all this mean? S Corp, C Corp? Is my invention a tax write-off of my idea? I'm spending money on engineers and prototypers and patents and consultants, whatever it is, just all trying to figure out all this stuff. And that's what we're doing tonight. So Glenn, one of our premium insiders, I think he is, maybe not, but maybe he might be. But he said, boy, Brian, you have pull to do that, to extend tax day one more day? Well, guess what? On National Inventor Club, I can. So let's start off by having Alex on. Alex Englard. He is with vState Filings. So, Alex, welcome to National Inventor Club.
Thank you so much for having me, Brian.
Thank you. We have this idea. We are starting to spend money. I know when I first started, I kind of made a little bit of a mistake. Every invention that I had, I decided to incorporate. So I had many different corporations for each invention, and I realized when tax day came that I had to pay taxes on each one, so I stopped doing that. But Alex, welcome. If you can tell us a little bit about yourself. I know you have a new company, and your colleagues there I have known for many years, so congratulations.
Thank you.
Definitely help us with structure of corporations. But first, please start off by giving us an intro on yourself.
Sure. So basically, we are a corporate compliance and formation services company. And what we do is we specialize in corporate formations, in registered agent, in compliance, UCC filings, anything that has to do with the formation and continued compliance of that entity. And although you may think it was a mistake, I think it's a great idea to incorporate for each invention that you do, just to keep everything separate.
It sounds like more filings for you to do, but okay, if you say so. You're in charge tonight, so thank you for that. Now, you have let's put up your slides here, so we can go through some of the information that you provide us tonight.
Sure. So before I even begin with the first slide, I mean, I just wanted to say that I have tremendous amounts of respect for the inventor community. I think that the work that you do is amazing. All of it really comes from a need that you feel needs to be taken care of, done better, improve on something, but fix a problem that you find, that you see, that you feel. And starting my business and starting working with a lot of startups, I know there's so many different hats that you have to wear. There's so many different things, trial and error that goes on, in addition to the hurdles that you have to go through. So I have tremendous amount of admiration and respect for this entire community, Brian, and thank you again for bringing me on here. I really appreciate the opportunity. Just wanted to start off really with, whenever we have, every once in a while, we have, a full gamut of services. But I just remember that when we wanted to showcase, shall we say, one of them, which was a DBA, doing business as. One of my colleagues had an idea to perhaps we can explain the concept with 7-Eleven. And part of that was having their logo and explaining the fact that, how do you have all these 7-Elevens that are independently owned, yet they all have the same name? And you have that throughout the country. So, we reached out to 7-Eleven. We wanted to use their logo. We thought it would be a nice catch. And we were surprised. They said, absolutely, we're just going to do a little background check on you. We're going to give you a limited amount of use time. But they were, amenable to it. We're a small company, not that they were getting any major advertising out of us, but, I learned a lot from that. I learned a lot from that colleague, and that is that always ask. You're telling yourself no if before they do. So, in the vendor community, I know that you're trying stuff, you're hoping for certain things. Sometimes, like Brian mentioned all day in the beginning, you're out of your league or you feel like you're uncomfortable in certain areas. Just ask, just go for it. Worst thing they can do is tell you no. But if you don't, you're the one that's saying no. So I just wanted to, bring that up and, express that and really give that over. A lot of this stuff that we're going to discuss is really boring stuff, but we're going to try to make it interesting, try to make it exciting. But more importantly, there's a lot of value here. And with that, why do we want to incorporate limited liability? What does that mean? That basically means that you want to protect your personal assets, okay? When you open up an entity, so the entity is sort of that umbrella. And whatever you do within that umbrella belongs to that company. So whether it's debts or whether it's a lawsuit that's affected by the company, a product, or whatever it may be, that's the point of a company. It only affects your company. It doesn't affect your personal assets. There's something interesting that I just wanted to add to that, and that is that some people think they have liability insurance, okay? Liability insurance doesn't protect you. Liability insurance protects the business assets, not your personal assets. The entity protects your personal assets. Okay, moving on to credibility. You're not a one-man show. I am a company. I'm not calling as an individual. It could be I have one employee. It could be I have 50 employees. No one knows. But you're a company. You're not an individual. There are advantages to anonymity. Whether it's you don't want the junk mail, that's the easiest one. But a company, and depending on which state you're in, will afford you that. It would depend on whether different ways to do that, whether depending on the state also. Some states require personal information, some don't. We can get that later. Also, another advantage to incorporating is transfer of ownership. You want to sell your company. So, instead of having to go through your file cabinet and say, oh yeah, I'll sell this piece, I'll sell that, I'll sell this. You're selling their entity. Here it is. This is what I'm selling. You have the assets, you have the liabilities. It's clearly marked when you sell an entity. Access to capital, which is very important. When you have an entity, you can sell shares, you can raise capital. And obviously tax benefits, there's the lower corporate tax in addition to the deductions that you can take as an entity versus an individual.
Thank you, Alex. Before we go on, just so everybody's aware, Alex is going to talk to us about the incorporation, the structure, the business structure, and then the second half of this, as our National Inventor Club tax day, the official tax day of NIC, we have Adam and Jackie Williams. They're from Pennywise Tax Strategies, and they're going to talk to us about what actually we can write off. But this is interesting to find out why we should incorporate, that we can protect ourselves through the business, and maybe it's our invention, our product. Just if anything happens, we know that we're protected and we have a chance to sell our shares, sell our companies. It sounds like it's much more organized for us, Alex.
Absolutely. If we move on to the next slide, that's something I do.
I could do that for us.
Okay.
There you go.
Thank you. Okay. So there are certain things that you should know beforehand before you start the incorporation process. And this has happened many, many times. People jump to either get a website or incorporate, and they make a mistake. So for starters, you always want to make sure that the name that you want is available before you go out and buy a website or buy a name that may not be available. In addition to the state, make sure the name is available. Now, there are some people say, well, I live in New York, I'll incorporate in New York. That's not always the best way to go because of protections, case law, and other reasons why you should perhaps form an entity in a different state. Lots of people like Delaware, and I'm sure the statistics will follow that at least 70 to 80% of the largest companies, the Fortune 500 companies, the companies that are on the stock market, are all formed in Delaware. They have very favorable case law. It's not for everyone, but some people like it, especially anybody that wants to go raise funds, wants to eventually go on IPO. Those are definitely one of the states to look into. Entity type, we'll discuss specifically. There are LLCs, there's S Corp, C Corp, LLPs and PLLCs and PCs. Cost is definitely something to be concerned about, whether it's initially or annually. Some states are very expensive. California charges $800 a year just to have your entity open. Take a look at New York, charges $9 every 2 years. So that's something to be mindful of. EIN is something that you need. That's a tax ID. Comes in different names, employee identification number, but that's something that you must have in order to open up a bank account. S-election is something we'll discuss on the next slide. CTA is an interesting new little regulation that was put out by the FinCEN, which is the Financial Crimes Network, and that basically is that they want to know CTA is they want to know who the beneficial owners are of the entity, who owns this, who's behind it. In a lot of states, it's not public information. It's becoming less and less the states that offer anonymity. But for instance, Delaware and New York are still ones that offer that. So BOI filing or CTA, depending on what you want to call it, that's a new regulation. That's a requirement. We'll go through it. Also, publishing is something that is required in certain states for certain type of entities. Pennsylvania, New York requires it for LLCs. Those are additionally some of the things to be concerned about.
And when you're saying publishing, those are those little advertisements in the newspaper or somewhere
that no one reads,
right?
No one reads, it takes up space, and they're tiny, and they cost a fortune in some locales, yes. So other than myself and a handful of others who may perhaps have their entity listed, yeah, no one looks at them. But yes, that's what we're referring to exactly.
Okay.
Here's a major controversy and perhaps a misunderstanding. C Corp, S Corp. So before I even get to that, there's an entity called a corporation. Okay. Now, every corporation in America is a C Corp. That's the way it starts off. S Corp is an election that the Congress passed and the IRS adopted. And basically, it's an election to be taxed like an S Corp. And what that does is it reduces the taxes that are owed in a major way. I'll go through a little bit of the C Corp, the regular corporation, and then I'll do a little comparison to an S Corp. Both the C Corp and S Corp are governed by shares. They have shareholders, just like any stock, you're a shareholder. When you have enough shareholders, you can appoint a board member. A board member will appoint management, which will run the day-to-day operations of the company. So that's C Corp and S Corp basically have the same thing. Here's the fun part. For a C Corp, when the money comes in to the company, and after all the deductions are taken and they earn a profit, that profit is taxed. Now, when the company goes ahead and distributes that money to their shareholders, they're taxed again. And that's double taxation. on the same money that came in. And that was definitely a burden on every corporation in America. When they passed the S Corp election, what it did was the money, the profits were no longer taxed at the corporate level. It created a pass-through, which means that it went to the personal tax return of each individual. Now, what that did was it allowed the individual on their own personal return to recognize the income, recognize the losses, and then recognize the deductions, which which basically eliminated one of the corporate taxes straight up. Now, there are limitations to an S Corp, and that is that it's restricted shareholders. You can only have 100 shareholders versus a corporation, a regular corporation can have unlimited shareholders. I mean, we know the stocks, you look at how many shares are outstanding, they have hundreds of millions. Now, also, there's restricted ownership for an S Corp. An S Corp can only be owned by a U.S. citizen versus a C Corp or a regular corporation that can have any nationality, mostly it could be foreign, whoever it may be, but there aren't any restrictions on that. So those are such important aspects of if you're going to use a corporation versus an LLC. Now, there are also different, I'm not going to go into it because I'm not licensed as an accountant to do it, but there are significant differences in an LLC versus a corp. With regard to different industries may have different tax benefits to use a corporation versus an LLC, and the double taxation might be worth it. So, but the C Corp, which is the regular corporation, is primarily used for very large corporations, and most smaller businesses, and I've owned a few myself, are most likely going to be S Corps.
And when you're mentioning the tax liabilities and the tax questions, we have Jackie and Adam Williams from Pennywise Tax Strategies that'll be on to answer some of those questions.
Great. I hope I can slide some in there as well. The next entity is an LLC, limited liability company. It's probably one of the most popular entity types and vehicles used today. It's just easy to use. It also acts like a pass-through entity, although it can be taxed as an S Corp as well. I don't want to get too complicated here, but you can elect to be taxed as an S Corp or as a partnership. But for the most part, it's a pass-through entity. It acts like an S Corp without having to do the election. There are unlimited amounts of members that you can have. Now, an LLC, I know I'm getting a little technical here, is governed by members and managers versus shareholders. And members are owners, managers are appointed. So managers don't necessarily have to have ownership, but they can be owners as well. Now, the way it sounds is probably the way it is. There's member managed and manager managed. So you can have managers that will manage the company, or you can have the owners that are going to manage the company themselves. Now, again, like I said, the manager can also be an owner, but it doesn't have to be. And lastly is what we call an operating agreement. An operating agreement is basically the Bible for the LLC. How much did you contribute? What the rules are? When can I sell? Who can I sell to? Can we take on debt? All of that is listed in the operating agreement and then some. So that's really something that is worthwhile to invest in, and typically an attorney will write that up depending on the situation. Now, there are times that if it's a single member, like let's say I just decide that I'm going to open up an LLC because I'd like to lease an office and I want to have a separate entity just for that. So do I need an operating agreement? It's really my right hand telling my left hand what to do. So sometimes the banks require it, sometimes they don't. So that's totally up to you. But when you have one or more partners, especially when there's money involved, you'd like to have something in writing. So that's the way an LLC works, and it's based off of an operating agreement. Like I said, these are very technical, but they're so important because, one mistake, whether it's a paragraph that's omitted or the wrong thing is kept into an operating agreement and you find one on the internet, let's just say, which most people can, you're going to it could be costly in the long run. So whatever you do, I strongly suggest, and that's really heading into my closing part, is, get good legal advice. You're starting a business, start it off right, get the foundation the way it should be. I know it's going to cost more money, but sometimes it's just not worth it to cheap out on certain things. Things are, in the beginning, everything's expensive. Everything is coming out of your pocket. You have no revenue, but it doesn't make it in the long run. If you're going to have a successful company, you want it to have it with as least aggravation as possible, by finding a good attorney, by accepting the fact that it's going to cost money. It's definitely worth it. Also, finances, get a good accountant. I mean, I'm sure that we'll have Jackie, as well as her partner, go through, but there are deductions that you can take. It's important to keep good books. I know most people are not business people that are doing these inventions, that are starting things, for the most part. And also, aside from the fact whether they are, whether they aren't, you have so many different things going on. There's so many different hats. It could be you still have a full-time job, and this is something that you're doing because it's a hobby or you think it's a great idea. But nonetheless, you just got to always keep an eye on that. It's the worst thing to get that notice from the IRS, you missed this, whether it's sales tax or any other corporate tax. Secondly, or thirdly, I should say, the future growth. I think it's really important that you set yourself up and have the ability to grow. Don't pigeonhole yourself to specific structures or specific items. You should be able to have the ability. Don't shortchange yourself and hope that you grow. Annuals is something that is really, really important and sometimes overlooked. Every year in the state, there's a requirement to file some sort of annual report. It could be money. It could be that they want updated information. It could be they want to know what the revenue was. But sometimes it's a few bucks, sometimes it's more expensive. But I think it's really important. A lot of people, they don't even realize that it's due. And every state, of course, has a different date for that. But, certain states like Delaware has March 1st for corporations, June 1st for LLCs. There are some states that have it on the anniversary month, the month before the anniversary. So it's 11 months in. I think it's really important when you set up your company, the company that you set it up with, make sure to be advised of when those dates are going to occur so that you don't miss it and incur late fees, taxes, and penalties, as well as interest on that as well. So that's really something that's important. And circling back to beneficial ownership, that's a new regulation. Anyone that formed an entity before 2024 has until the end of 2024 to file. What that is, they want to know who owns the company. They want to know a list of anybody that owns more than 25%, or someone I call directs traffic. You can have a CFO, you can have a CEO. He might not be an owner, he might be a hired hand. You could have in-house counsel. All those people are people that make decisions that affect the company, and they're included in that BOI filing, beneficial ownership filing. They're claiming serious penalties for not doing it, anywhere from 2 years in jail to fines in the thousands of dollars. So if you did file in 24, you only have 90 days to do it. So please make sure to do it as soon as possible so that you don't have any issues later on. Lastly, I don't think it's, I wrote down scams. I think that it's just good practice just to be mindful of what you're opening. Email-wise, those good old-fashioned phishing tricks. And also, sometimes you get a mailer, and we get it all the time. Alex, could you take a look at this? Did I do this? Do I need to do this? A lot of times you get these companies that are soliciting, whether it's for these public posters or whether it's for good standing certificates. None of that's required. They're just looking to grow revenue and, sucker you in if not. That's, for the most part, my presentation.
Thank you, Alex.
You guys have been amazing,
Well, your information is extremely helpful. Usually we end our meetings at the top of the hour.
Mhm.
in about 10 minutes or so. But you know what? These type of somebody like yourself to come on, and for us at any time that we decide, or a future inventor, entrepreneur, startup, whatever, comes and references this presentation that you gave, this is going to help us. So thank you. I know that you just started your company with your partners, vState Filings. How can we get in touch with you, Alex?
vstatefilings.com. And just to give you a little bit more background, I started this company in 2007.
Oh.
We've had a few iterations from LLCs Publishing Corp to Interstate Filings. And just in the last 2 months, I recently reacquainted myself, or actually just took the relationship I had with one of my partners for the last 30 years and did a strategic partnership. We changed the name to vState Filings and joined a great group of guys of great business minds taking this company further. It's been my pleasure. I'm looking always to help. Happy to chat with anybody that has any questions. That's one of the things that I enjoy about this, getting to speak to people, answering questions and helping guide them.
Thank you so much, Alex. We appreciate it. We'll see you again soon. Thank you.